Hi, this is Jan Altmann, Director Investment Strategy at ETC Group. I'm super happy to contribute to the Warsaw Passive Investment Conference with the presentation adding crypto to an ETF portfolio with crypto ETPs. So if you're already operating an ETF portfolio, it's super easy to add crypto ETPs to your portfolio. But what do you have to take care of? But first, before we start, some words about the company I'm working for and myself, so you know better who you're talking to, who is talking to you. So ETC Group offers a range of first-class crypto ETPs. All products are based in Germany. They are 100% backed by the underlying cryptocurrency. We have professional custodians. We are operating the most liquid Bitcoin ETP in Europe, and not only the most liquid one, the biggest one, and we're the only ones to offer an MSCI index ETP on cryptocurrencies. We are an independent investment boutique with assets under management of about 1.7 billion euros assets under management with a 4-year track record. And my colleagues consists of TradFi and crypto experts. Here some achievements. So we were the first to offer a crypto ETP on the German market to be traded on Xetra. We were the first to offer a crypto ETP on an MSCI index, and also the first ETP on Xetra with central clearing facilities. And the company is ISO 70001 certified. Myself, I have been working for 25 years in the ETF industry. I was instrumental in setting up the first ETF trading segment during my time at Deutsche Börse, and have since worked for ETF providers, index providers, etc. Spent some time at the internet portal justetf.com and have educated quite a lot of retail investors about passively investing, buy and hold, and allocating their assets into ETFs. So let's start with our main topic. What are crypto ETPs? Before we start off, I think we have to talk about how you usually allocate cryptocurrencies and how the founders have meant to allocate cryptocurrencies in your portfolio. So what are you doing? You're putting fiat currency, US dollar, euro, whatever you like, to a crypto exchange, and you're getting cryptocurrencies in exchange. That's why they call themselves crypto exchanges. And usually you would do self-custody. So you own the keys, you have it on a cold wallet, or you choose to go for an online wallet. This is also possible. But many investors, specifically those who want to trade, hold their cryptocurrencies in a hot wallet at companies like, this is just a random selection here, no recommendation, like Coinbase, Bitpanda, Bison, eToro, Binance, Bitcoin Swiss, and numerous others. So your money is sitting there, and actually these companies are now crypto brokers instead of crypto exchanges. Well, we'll see how we do it for crypto ETPs. Below you see typical addresses, public addresses. The one for Bitcoin you see here is a wallet address we are using at ETC Group, and a typical Ethereum address, it's a bit shorter. It's also one we are operating at ETC Group, and everybody can see our assets on the blockchain live when you know this public key. Okay, there's another way of allocating cryptos in your portfolio, which is very comfortable when you're used to trade ETFs already. So it's working from selling over holding to buying via regulated partners. So here on the left, this is you, or maybe a client of yours. You give your order via a normal stockbroker on the stock exchange. Could also be Warsaw Stock Exchange, of course. The order is being executed in an electronic order book, and your counterparty is not the blockchain itself. It's also not usually somebody else who is selling his units. These are market makers. These market makers are in the order books, putting orders in there to make it possible that the index is tracked as accurate, that the cryptocurrency, the value of the cryptocurrency is tracked as good as possible. And they have names like flow traders, DRW, Jane Street, and other liquidity providers are on the market as well. So your order gets executed, and you are now the proud owner of ETP shares. So what's happening in the background? Not one crypto transaction has taken place so far. In the end of the day, or even in the middle of the day, the market makers can go to us and say, well, we need, let's say, 10 million of your ETP shares. And then we say, well, give us the corresponding amount of Bitcoin. And that's how we get Bitcoin into our vehicle, which doesn't call itself a fund, because it's not possible to allocate cryptocurrencies in a mutual fund. All ETFs are mutual funds, but it's a company solidly founded to allocate these cryptocurrencies, Bitcoin just as an example. We are the owner, but we have a lot of external parties controlling this transaction, including an administrator, a professional custodian holding the keys in cold storage, offline, maximum security, and the whole company has, of course, a normal accountant, and the accountancy frequency is the same as of investment funds. And there's even a feature that you can get back your cryptocurrency in a redemption and use it for self-custody. So this is the way you can allocate, or you can buy and sell crypto ETPs. And this is the mechanism behind. That's important to know. It works more or less like ETFs are working as well. If you buy, let's say, an MSCI World ETFs, you have the same parties in the order book. These exchange shares with ETF shares with the ETF provider. So same mechanism as ETFs, or also gold ETCs, working almost the same. Here are our products. Just to give you an example, we are operating 8 ETPs. Most of the volume is in the Bitcoin ETP, which is quite big, actually, the biggest one of its kind in Europe. And they are all organized in the same way. So every cryptocurrency is 100% backed, even for baskets like this product here holding 20 different cryptocurrencies. Every cryptocurrency contained in the basket is physically backed. And they are listed on various exchanges in Europe, not only etc. Just to give you an example, now some structural or remarks about the structure of the product, just to give you an idea how to check if an ETP is eligible for you or not, because some of the products differ. Like ours is BaFin approved. BaFin is the German regulator because it's listed on a German stock exchange. It has a German ISIN. Not all crypto ETPs, and there's a huge variety on the market, up to 100 crypto ETPs available in Europe. Not all of them are listed in Germany. Some use the Swiss regulator, some the Swedish regulator, some Liechtenstein, and also as domicile. Then we have a bankruptcy remote structure. So we have appointed an independent trustee. So if anything goes wrong with the special purpose vehicle holding the cryptocurrency, we have security documents publicly available in place, and the independent trustee takes over control in this case. It's 100% physical backed. This is also the reason why the tracking error is quite small, because at all times it's 100% physically backed with the underlying. We have an independent administrator. This is a bit special about ETC Group. You've seen there are not many transactions going on, and we are not buying cryptocurrency ourselves for the product. It's delivered by the market maker, but somebody has to control that the market makers deliver the right amount of cryptocurrency and that we give out the right amount of shares, of ETP shares, and we have an external watchdog appointed called Apex Group for this purpose. We also have a fork policy. Sometimes forks happen. That means that a copy of the blockchain goes online with different mechanics. You've seen that in September 2022 with Ethereum. The old proof of work was forked, and then automatically our investors would have the right to also hold shares or units that have a right to participate in the forked blockchain. That is also not the case with all ETP providers. We also have our own lending policy, which is a simple no. Yeah? We don't lend out any cryptocurrency from our products. We are working with market-leading custodians. with the biggest custodian, crypto custodian in the world, for instance, with BitGo, but also with European players like Kumaino and Zodia. And we provide top-notch transparency. So we even publish our wallet addresses. So it's easy with a block viewer to take a look at the blockchain and control our ownership. That's also quite unique among cryptocurrency, crypto ETP issuers. So take a look at these different criteria when you select crypto ETPs. So there are some pros and some cons, of course. So one of the biggest pros in my eyes is, at least, and I'm an old ETF guy and I love buy and hold, trading and investing is as simple as with ETFs. And the other structural elements I have described to you. All partners that are appointed to participate in our product are regulated in the conventional financial market. The replication of the underlying asset is quite exact because it's just 100% backed. And there are very low bid and ask spreads for BTC and Ethereum. Liquidity is quite high in these products. Take a look yourself. And there are even crypto baskets available. That's also a big advantage because you don't find baskets on crypto exchanges. But there are some disadvantages, of course. Trading is limited to exchange opening hours because crypto trading is 24/7. And here you're limited to exchange opening hours. You can't trade on weekends, for instance. You have management fees. Or to provide these products does cost can cost quite a lot of money because it's still a new market. The assets are not as high as for ETFs, so economies of scale are not already there. So the range is from 21 basis points to 250 basis points. For altcoins, you usually have to face higher spreads, but this is exactly the same on crypto exchanges as well. But you are limited to about 20 different cryptocurrencies if you take a single cryptocurrency tracker out of 20,000 currencies available on the market. And the cryptocurrencies are sometimes not available at some brokers. So like these two names just to be mentioned here. So take a look at your broker offering if it allows to offer crypto ETPs. So what are we doing in the ETF portfolio with such products? Yeah, the attitude is quite different. In 2021, when Lambo and To the Moon from Crypto Growth were quite popular hashtags on social media networks. And in 2024, the CEO of the biggest asset manager in the world, Larry Fink, said Bitcoin is no different than what gold represented for thousands of years. It's an asset class that protects you. Quite a change of opinion, right? So if you're investing with a common sense and if you love ETFs, you might be an owner of a typical 60-40 portfolio, let's say containing global equity, emerging market equity, commodity, gold, and a quite secure component of Eurozone bonds. And what happens if you add, for instance, 3 or 5% to these risky assets? First of all, we conducted a study with an external investment consultant called MacroHive, and he has checked for us, is it really an asset class? Is there a correlation of crypto with other liquid asset classes, or is it quite independent? Then he checked for us risk return over 13 years with and without crypto allocation in such a portfolio, because crypto can be an asset class, but it's not fun if it doesn't produce returns at considerable risks. Then they did a lot of tests with rebalancing, yearly, quarterly, or monthly. And I can give you some advice on that afterwards. And they tested the relevance with 1,000 3-year time periods over 13 years. So quick overview on the results about the correlation. Many of you might think, well, crypto is strictly correlated with growth equity, but that's not the case. And with over 13 years, global equity correlation is almost zero. And also with the other asset classes, it's almost zero. Even in 2023, until the middle of the year, correlation was quite low. And this is still the case. So that's really an illusion to say crypto has a strong correlation with growth stocks. It is the case in some periods of time when the market goes down. Now, some results for you in figures. What happened to the 60/40 portfolio in these 13 years? So the 60/40 portfolio produced 83% of return overall, that with a 3-year annual return. With 3% crypto, it has produced 270% return, and with 5% crypto, 473% return. That is quite significant, and that is already with monthly rebalancing. That is quite remarkable, right? Volatility has gone up, not significantly, just 1 percentage point, and therefore the Sharpe ratio was raised by 60% when you would have allocated 5% crypto. The maximum drawdown wasn't bigger as well. So no catastrophe in your portfolio if you control it correctly on a monthly basis. And here you see the crypto component in your portfolio. Here you see, for instance, other components like global equity, or the Eurozone bond. Monthly rebalancing seems to be a good idea to produce steady returns. You can also do quarterly to lower the trading costs a bit. So here's some results. Correlation is low over long periods of time. In some downward phases, there was high correlation with other risky asset classes, but we think cryptocurrency can be understood as a separate asset class, which has a strategic place in your buy and hold portfolio. The returns, I've listed them between 470%, you've seen that, and even for yearly rebalancing, 2,900% with a 5% crypto mix. And monthly rebalancing has only marginally increased portfolio risk, while the risk-return profile of the portfolio has improved by over 50%, which is quite remarkable. So the relevance was also tested, and our investment consultant could confirm these results also for the 1,003-year periods they have tested in this study. So maybe it's a good idea to have a strategic allocation to crypto in 3 to 5% for a typical 60/40 portfolio. And what would you take for that? Well, why not a crypto ETP? So should you allocate cryptocurrencies to a portfolio, there is a growth potential for the asset class. No doubt, there is a diversification effect. The growing number of important cryptocurrencies like Ethereum will increase, so there will be even a bigger diversification effect over time. And a secure component can be an ETC or crypto ETP, 100% backed by cryptocurrency, sitting in the same broker account as your ETFs do. What are some disadvantages? Well, it has led to a little higher volatility of the total portfolio, and the correlation of cryptocurrencies is not zero, so it can move in the same direction as other risky asset classes. And of course, past performance is no indicator for future results. This is also certainly true for cryptocurrencies, but a passive portfolio component with regular rebalancing can really add diversification. So that's our main message, and that's why we provide crypto ETPs that are traded like ETFs. You can get the full portfolio study also on our website. I invite you to download it from the website with a link provided here. So thank you very much. And I was super happy to participate in your passive investment conference. Thank you very much.